discussion of topic of discussion. Federal. You can see we haven't done this in a while. Federal budget and the property market. We have a guest speaker in the studio with us today.
Hello guys.
Manjot.
Hello to our audiences on Insta and Facebook.
That's it. Hello to everyone joining us.
Welcome, long time coming.
Long time, yes. Sorry, we've had to delay this session a couple of times with all sorts of things happening. But nevertheless, we are here and discussing a very important topic that's impacting a lot of households, the federal budget, and how it's going to affect the property market. So this is an interactive session as you join us and hear our conversation. If you have any questions while we are live, you're welcome to ask away and we'll be able to answer them for you. So firstly, welcome. And do you want to give you a bit of an introduction? You're a recurring guest speaker, but for those of you that wouldn't know about Manjot, if you want to just give a big background.
So I'm a chartered accountant myself, and I've got a firm in Bella Vista just around the corner to these guys, Westhill Partners, and I've been on this platform quite a number of times.
Yes.
We were meant to do this actually a couple of weeks ago, but we had lots going on. We had to delay it.
Yeah.
But I think it's all well. We can get started.
That's it. Perfect.
Excited to have you back.
Okay.
So, just to begin with, we'll begin with the key takeouts on the budget affecting home buyers out there, I would say.
Yeah, so what I got out of the budget primarily was the government, so the current government is focusing on affordability. And, last year with all the COVID and previously with all the COVID and everything, the idea was to stabilize the economy. But this time around, it's about building the economy. It's about, getting people involved and coming from affordability. There's 2 points that they've touched on affordability. The first one being they're trying to help first home buyers or new home buyers enter the market. And the second one is, of course, they're easing some pressures on cost of living. So because we are touching base on real estate a lot, so we'll start off with how they're helping these first home buyers. So the schemes that were existing prior to this, they've just pretty much expanded those schemes. And so I'm talking about the home guarantee scheme. So which is allowing you to go in and buy a house with a less of a deposit, right? So they've now expanded the scheme to 50,000 places, over the next few years. And they've split that up into 3 categories. The first one being the first home guarantee. There's 35,000 places available under the first home guarantee to support eligible first home buyers to purchase a new house with a deposit as little as 5%.
Wow.
Right.
So which means there's no lender's mortgage insurance involved because the government's actually guaranteeing the rest of the 15%. So that's 35,000 places there, 10,000 guarantees each year from October this year to June 2025 is going towards the regional home guarantee. So if you're going out in the regional areas and you're buying a house there, you can purchase a house with a deposit of as little as 5%.
And that's been one of the biggest trends recently. There was a report the McGrath Group did recently. There's been a biggest increase in regional purchases. Again, people wanting to stay away. More land. So regional areas are one to watch for growth as well from a property pricing point of view, because there is a lot of push from the government as well as just general interest for those people that are wanting to buy bigger blocks of land to sort of look further away in different cities
and
as well.
I think primarily it's coming from the house prices as well.
That's right.
And there's an interesting article yesterday in the SMH as well, basically saying only 1/3 of the people want to go back to the CBD. So, which is an interesting fact as well. So people don't see it as a destination as such anymore. So people are hanging around their local neighbourhoods and the business parks. So,
absolutely.
So you've got the first home guarantee, 35,000 places. Regional, which we've just touched on, 10,000 guarantees there. Again, you can go out there and buy a house in the regional areas with a deposit as little as 5%. And the third one is interesting. There's 5,000 places for single parents. They can buy a house with a deposit as little as 2%.
Which is a major help out there for the single parent.
And like we said before, these schemes have existed before, but they've just categorized them now. They've just expanded them. And I think Gurdev can touch on a good point here, whether how did the banks perceive this in the past? I mean, they're similar schemes. It's just a bit of an expansion now.
On the back of that, previously the banks have opened other places. So certain banks have got certain allocated number of spaces. So it's basically a first in, first serve, whoever gets in. So I think this time probably be pretty similar. So normally we have to do a pre-approval, register a name, you're on the waiting list, and then hopefully you find a property within that time frame and you can make use of this scheme. So I'm pretty sure this time will be the same thing. So do get in touch if you're a first-time buyer. We'll get you registered.
Eligibility-wise, the criteria is unchanged, I would say. So again, you need to be an Australian citizen, except for the regional side of things.
Okay.
So if you're if you're buying a house to live in the regional areas, you can be a permanent resident as well.
Right.
Again, that's coming from the whole push everyone towards the regional areas. You need to be earning up to $125,000 as a single, or $200,000 as a couple. And of course, you must tend to be owner occupiers of the property, so you can't really buy this or do this under any investment or anything like that.
And on the back of that, we're just talking offline as well, there's a price cap as well in Sydney.
So that's an interesting one, price caps. I was going to touch on that. It's good that you've raised it. Now, yes, they've come up with all these schemes to help first home buyers get into the market, but there was a bit of a backlash because the price caps again were unchanged, and the price caps were considerably below the current median house prices in the market. So for example, in Sydney, the price cap that they first came up with was, the house value needs to be below $800,000, but the median price in Sydney is about $1 million these days. So
it's tricky.
Where are these people going to go within Sydney to buy a house for $800,000? Probably like apartments or units, but not houses. So I think just a couple of weeks ago, because of that whole backlash, they've now increased those price caps. I mean, we won't go into detail into each of the price caps for the cities, but they've increased them by about $100,000. So Sydney's now up to $900,000. But overall across the country, the price caps still remain below the median house prices. Unless house prices come down, which we'll touch on a little later. I don't know how this is going to play out. How many people, whether like those 50,000 people will be actually able to access these schemes or not. Now, just like there's been mixed reviews about everything that's going on with respect to these schemes. The first one being, yes, you are creating, room for first home buyers to enter the market, but like we, discussed before doing this live, the whole idea has been to focus just on demand. And, experts are saying, the government's just touching on the demand side of things. That could end up actually increasing house prices, making affordability much more harder, and the whole focus is affordability.
That's right.
You know what I mean? So it can sort of backfire because supply isn't being addressed, and the experts are saying the only way to address supply is to build more homes.
That's right.
And then adding on to that is adding on to the demand side of things, demand is likely to be boosted as well, because you're capturing, they're saying, about 80 to 95% of people within those income levels. So a single person earning under $125,000 or a couple earning under $200,000, that's a considerable income level. So there has been demand for these schemes in the past. It's just about to get bigger because the income levels have been unchanged, and with house prices going up recently, I think a lot of people who haven't been able to save for a deposit will be wanting to touch on these schemes. So
So it'll be
demand
interesting to see how
demand
it
is
plays out.
demand is going to be a huge issue here.
Yeah.
Yeah.
So we're fueling demand and not addressing so much of supply based on the information that we have at the moment.
Yeah.
Which is going to have, but interesting enough, a bit of a tongue twister today. Obviously there's the talk of town about the interest rates potentially going up next week. We know that the inflation is at 20-year high. Last time it was like that. It was during GST, when GST was introduced. There probably would be a balancing effect. Yes, the demand would go up again, but potentially the interest rates increasing will have a flow-on effect.
I saw that yesterday. Inflation has been pretty high.
High since when GST was introduced, and construction costs are through the roof, cost of living is through the roof. So, and what we've noticed on the ground in the last 2-3 weeks doing open homes is the tap has slowly turned off.
That's right.
And it's going to be interesting to see what happens over the next couple of months. So, talking about the demand and supply, there could be a supply coming up. I feel it with interest rates or fixed rates. We're talking around 4.5%, depending on how many years we fix for.
And what are we right now?
Now we're fixing 2 years at around 4% with a lot of the majors. And 3 years is we're in the mid 4s.
Okay.
At the 5 years we're high 4s, I think.
Mm-hmm.
So we're fixing 2 year rates at 1.79, 1.89. Only about 6 months ago. So the fixed rates have already 2.5 times gone up, and that's double your interest cost. If they go up further, we're talking about 2.5 times the interest payable, which is crazy. And
that's going to affect a number of households.
And
the reason, primarily the reason for inflation, the way I see it, has been supply issues. Not just property, but fruits, vegetables, meat,
everything.
And the pandemic is obviously having a huge impact on supply chain.
Coming out of pandemic, you thought, all right, supply would start getting better. Then within Australia, you get the floods, and internationally, you've got the war going on.
That's right.
So it's all happening.
Exactly.
So that's why inflation has gone up, and economically, when inflation rates rise, interest rates are bound to follow.
That's right.
And the government, is having discussions these days what to do now, but I don't think they can do much. The economy has to play its part naturally.
That's right.
So interest rates will go up earlier than expected.
That's right.
Probably next month.
They were earlier predicting end of next year.
That's right.
So
and look, obviously, the war has brought up a lot of, it's brought it forward. The worldwide inflation has brought it forward. Our 5.1% is nowhere near what's happening in the rest of the world. So at least we're covered from that point of view with good economic policies, but still.
And on the back of that, interest rates had to go up anyway.
That's right.
Been at historically low levels. Yes, a lot of borrowers out there have never seen interest rate rises. Even a lot of first-time borrowers over the last 4 or 5 years. So interest rates were going to go up one day. That's just
the time has come through.
So the rises in interest rates coming up next month would obviously slow that demand side down a little. I'm not sure how much it'll push supply, but it'll at least slow the demand, because if you have house prices going down, obviously, but it's gonna have an effect on these schemes as well.
That's right.
Because these schemes, if you look at one aspect, you're saying there's a huge demand coming up, but no supply. But now they're trying to address the house price side of things. So these schemes don't let those house prices go up. So interest rate will address that side of the coin. But then people borrowing 95% just with 5% deposits. If the house prices go down, they could end up being in negative equity here.
That's right.
That's another thing. You have to be really careful of where you buy. You don't want to end up in that position where you owe more to the bank than what the house is worth.
And
that's a good point. You could actually buy, or do some research and buy in areas where house prices, even after the interest rates drops, aren't predicted to drop so much. And if you're one of these people that has bought under these schemes in those areas, you won't really be affected by negative equity, because if you fall into the negative equity trap and then your repayments go up, it's a larger loan, it's a 95% loan.
That's right.
And you're unable to meet those mortgage repayments, or you want to sell because of changing life circumstances, you could be selling at a capital loss here.
That's right.
That's where you got to be really careful, and I think where a lot of the new estates are, where we see a lot of overvalued prices, I think they would be hurting through these times. So you've got to be careful when to invest.
Something to watch out on. Look, it's an opportunistic time for
Yeah,
some.
good time to buy. I
And-
reckon if your cash is going to be king, as we always say.
That's
if you
right.
cashed up
If-
towards the
yeah.
end of this year.
Yeah, and it's a great time
Yeah.
for those that are upgrading. So
Upgrading as well, yeah.
when the market is on its way down, you're selling high and you're buying low.
Yeah.
That is an ideal way to be able to enter.
And another thing is, if you're buying and selling in the same market, it really doesn't matter.
Yeah, it's all.
because you're doing the same transaction.
That's
So
right. That's
And
right.
if you're upgrading, as you're saying, it's you're normally
Yeah.
better off.
Exactly.
And it's not going to really matter as well if you buy under these schemes. Like I said, you're on a 95% leverage,
Mm,
but you're planning to hold for the longer term.
that's right.
Because historically speaking, if you look at the longer term, the
Mm.
prices aren't going to drop so much.
That's right.
Like, they'll level out, but they'll eventually, you'll eventually
You'll
stay
make
in
money.
positive equity.
That's right. That's right.
So it's only for those who will plan to sell so quickly that might lose out on.
Mm,
But like as a summary, the crux of this is where we've addressed just the demand side.
mhm.
We haven't focused on the
Supply.
supply.
Mm.
It's just that these house prices dropping or the interest rates go up might address that demand
Yeah.
side a little.
Yep.
But the experts are
Yeah.
saying like affordability wise, this is temporary.
Temporary. Yeah.
Mm.
How
and,
do you?
and talking about house prices have gone significantly higher over the last 2 years. Even if there's a little bit of correction, we're still in a better position than in 2019 anyway.
That's right.
So
Yeah, it's all relative.
it's all relative, so it's
Mm.
nothing
Mm.
to be
From
worried
that
about.
point of view.
Yeah.
Well, thank you for those. So Charanjit and Rabi, thank you for your comments. And again, it is a live show, so you are welcome to send your questions or feedback while we are talking to Manjot. Love saying that name. To be able to discuss about the federal budget and the property market. So, are there any other trends, any other sort of topics that
I think that was primarily to do with property
Yeah.
and the budget. One thing I think we didn't touch on was the rental side of
Yes. Mm-hmm.
the market, right?
Yeah.
So away from these schemes, there has been no focus at all on helping the renters as a part of the Commonwealth rental scheme to be able to put a little bit more in their pockets so that it could help them with their rent. But the argument against that is we're trying to help those renters go buy a house
That's right.
with that little deposit,
Yeah.
So I don't know how that's going to play out though with the renters. Are the renters really going to be using these schemes to? I mean, some of them they might.
Yeah. If they can make use of it, I think it's worthwhile because the rents, what we have seen in the last couple of months, rents have moved
Yeah, look,
significantly.
For low income earners, it's become unaffordable to be able to move out and get another property because they are up for at least $50 to $100 more of the similar property that they're living in, paying that much more.
But I think
when
this
they're
rent
moving.
adjustments has been over the last couple of years. Rents haven't really moved. Property prices have moved significantly, whereas rents have played basically stable.
Yeah.
So the adjustment that has happened is a long time coming. I
Is
think
it timely?
as well. So,
Yeah.
Yeah, but again, there hasn't been much help to the renters, and the experts are saying that side of the whole market should have been addressed
Yeah.
as well.
Yeah.
But I don't know. It's like economically, I think
Yeah.
it's too hard to give everything to everyone.
Yeah,
Yeah.
of
They're
course.
going to address certain sides of the market. It's
It's
really
easy.
hard to address everything, I guess.
Yeah. Look, I think the main things that I'm seeing in this current budget and the election and everything that's going around is the affordability side of things. The cost of living and health versus financials. Like
Yeah.
what are the policies?
And I think there's
that are
a
supporting.
number of factors which we've touched on, which are outside, which we can't control and influence this as well.
Yeah.
That's
around the
right.
world.
I mean, even if you think about insurance,
Mm.
with all these regular floods and bushfires, there
Yeah.
are some areas that are uninsurable.
Yeah.
Or the premiums are so high that that's
right.
also causing the increase,
Definitely.
contributing to the inflation as well.
Yeah.
So
Yeah, I
all
think
of these,
there's inflation in like every side of the market,
that's
That's
right,
right.
for
we look at.
multiple.
And they addressed fuel prices in this
Temporarily,
budget as well,
yeah,
temporarily.
for 6 months, yeah.
I don't know. You guys are driving around to open homes,
Yeah.
whether that's helping you or not.
Carpooling as much as possible.
Yeah.
Taking
So
one car.
we've seen temporarily for the next 6 months
Yeah.
there'll be a bit of a relief in the fuel prices, and they're taking that to be a really strong budget measure, but I don't know how strong it is because I've got some clients in the transport industry. They're saying with the cuts to the fuel excise or the fuel subsidy, or like giving it back to the consumer, the fuel tax credits that the transport industry used to benefit from, they cut as well temporarily.
Right.
So you used to get back like 17 cents a litre if you're in a transport company, small business or whatever,
Oh, yep.
and you're using those big vehicles, diesel fuels and everything. Because the government's now helped you in these subsidies and to bring the fuel prices down, but that has also meant that those transport companies can't get a fuel tax credit anymore.
Right.
So
And
that's going to have a flow-on effect.
That's going to have a flow-on effect. So
yeah. There's always
I had a
one
couple
thing
of
or the
clients
other.
complaining, why, but I think like this whole industry is planning to come out on the road and protest against that.
Oh dear, we've had enough of
But-
protests.
But it's temporary. Like
Yes.
if the drops in fuel prices are temporary, then those cuts on the tax credits are also temporary.
Yeah. it
So
will go
fuel
back.
prices was one thing that they said we're helping with cost of living, again a temporary measure, like we discussed.
Yeah.
The second one is they're saying low to medium income earners will get another $420 as a
More.
tax offset
Yeah.
when they file their 2022 tax returns.
Yeah.
All right.
So overall, it's going to end up being $1,500 tax offset. Again, temporary. Next year around, it'll offset again.
Might be different. Yeah.
Small business, we'll touch on that. Again, they're helping cost of living for small businesses. So small businesses investing in employees and technology. So employees, I mean, if you're training your employees,
Yep.
whatever investment or whatever funds you're contributing towards training your employees, you can get an extra 20% tax deduction. So if you're spending $100 in training your new employee, you can deduct 120 instead of 100.
Okay.
Right, so that's a little bit of help there for small businesses.
Yep.
For employee training, and then also similarly to technology. So if you're investing in, I don't know, cloud computing, you're getting a new website, right, or cybersecurity and all these things.
Yep.
So if you're investing a lot in technology as a small business, again, if you're spending $100 there, you'll get $120 tax deduction. So the whole idea is to accelerate, or the whole digital side of things and create jobs.
Yeah.
But other than that, I didn't notice much that the budget had,
Okay.
related.
Yeah.
There you go. A lot of information there.
There you go. Well, perfect. Any
I
final?
think we've covered everything.
Yeah.
Any
we
other
have.
questions, do let us know.
Yeah, perfect. Yeah, so we'll be answering questions afterwards as well as people tune in after the live completes. Happy to have those answered for you.
Yeah, let us know if you'd like to know about all those caps, which areas you want to buy in
Yeah.
and what
Yeah.
those caps are, instead of mentioning them now,
Yeah,
Yeah.
because
because
they'll
it'll be
be
a
all
lengthy
different.
session otherwise.
Yeah,
We'll write them down in whatever messages.
yeah,
Yeah.
as we get the
Responses.
responses.
There you go.
Perfect. Any final words before we finish off?
We'll
Oh,
see you
good.
guys again
Okay.
soon.
We will see you guys again soon. Thank you very much. Once again, any question or any recommendations for future topics of discussion, do feel free to just leave a comment here or send us a DM. We'll be happy to incorporate that and find some relevant and appropriate guest speakers to cover specialist topics. Thank you very much for watching. We'll see you guys
Thanks, guys.
next time.
Thanks for having
See
me.
ya.
Thank you.
Thank you.
Thanks, guys.